Hey guys, what's going on? Hope you're doing great. We've got three very important stocks to go over in this video. Three huge setups that I think will outperform the S&P 500, which returns about anywhere from 8 to 12% with an average of 10% per year. So the very first one is going to be UPS. We also have Disney, ticker symbol DIS, and then the third one is the cheapest and has by far the biggest, and I mean by far the biggest upside in terms of how much you could make within the next 1 or 2 years just by holding these stocks. All of these stocks that we're going to go over have a dividend yield. Disney's is very small, it's less than 1%. UPS is 4.48%, that's very good. And the last one is over 8%. So the last one, in my opinion, is the best by far. So we're going to go over fair value, price targets, so how much we can expect to make within the next couple of years, and how much I'm actually buying of this stock. We're also going to look at why we're entering now, pretty much every important detail we need, so make sure you guys watch till the end. With that being said, I am trying to monetize this channel, so I really would appreciate it if you liked and subscribed. We did hit 2,000 subscribers, so I'm very thankful for that, but we still need like thousands of watch hours, which is why I'm trying to get these videos out all the time, so I do these trade recaps very frequently. Last thing I wanted to say is if you want access to all my stock trades live, make sure you check out the Discord. I'll just link it in the description. I send literally everything that I take live there. So that's a great way to meet a lot of people that also trade stocks, or just get access to, the option trades we take, the stock trades we take, futures. We got pretty much everything, even some alternate investments in physical items, which is coming soon. So very exciting. Let's go ahead and talk about these three stocks. The first one, of course, being UPS. So we just closed our UPS shares. We had an average, I think my average was like 135.50, something like that. We sold, we took the third take profit here at almost 148. Very good profit, that's roughly 10%, give or take a couple percent because of different fills. But of course we took these trims along the way. I can go ahead and delete these now because they're no longer necessary. That's just where we took profit. Now, literally just a few days after we closed this position, and I'm so fortunate because I'm so lucky because I would have held these shares through earnings, but we did hit TP3 before that. So it just got destroyed. It got wrecked. They missed on earnings. Now, here's why. Not only did they give bad guidance, which is never a great thing, and they missed EPS just slightly, a real kicker was that FedEx killed earnings. It went up 15%, and UPS couldn't even come close. So it went down 12%, which means I'm buying back my shares that I sold at 148 at 120. Well, my average right now is about 128. So I'm thrilled. I'm super happy with what's happened because I got out at the perfect time and now I'm getting in much lower than my original buy. Now, this is a 52-week low officially, which means we don't have exact zones like this to see where we want to buy off of. So I'm basically just going to be dollar cost averaging. Hopefully it falls down even more. That would be the best case scenario. But if we take a look at like the 5-year, we can see that it's been in this sort of downtrend for a while. So it's been doing this, and it's just about when it's going to break out of this massive trend line. It's been stuck in this massive kind of diagonal zone, if you will, just of where it's been going back and forth from. I think that could happen within the next couple of years. It will 100% be back at 150 probably by the end of this year. So I might even look at taking some options trades, some kind of long-term options. Semi-long-term is a better word. That might be pretty good because those could pay substantially while shares are so expensive compared to options. Now the next one, Disney. Oh, real quick, the fair value is 158. So it's even higher than 150, whereas price targets are now, of course, being dropped just a little bit lower, of course, because of this move down. But fair value is 158, so that's very good to the upside. That's all the way, let's see, right about up here. So we could look to sell our shares at around 158 within a year. Now, Disney, this is the next one. I personally think, and I gotta do a whole other video on Disney because this is a big one. I personally think this is the best stock to put your money in right now, besides maybe like a couple ones I've made videos on recently, like American Airlines is amazing. Disney, though, the reason I say it could be the best is because even though all these other stocks have better, in my opinion, better upside than Disney, Disney is probably the safest one because we're at COVID lows. It hasn't been this price since 2020, and of course, back here when we got into that original position back in October of last year, we bought some shares down here. But these are COVID lows we're looking at while they have expanded substantially with, of course, their parks, but also streaming services, which is Disney Plus. You know, that's been huge for Disney. So I think now is a pretty much free opportunity to buy Disney at. Their fair value is 115, which means it's all the way up here. This is their fair value. Plenty of move to the upside, right? Not a ton compared to other ones we will be looking at and other ones I do videos on, like a couple that I just named, but still very, very substantial. It also does pay a dividend yield, but it's not anything crazy. So that's a big one. I'll do a whole other video on Disney. I am buying shares as of today. I'd like to target maybe an $85 average, but I'm not sure if it's even going to get that low. The last one I wanted to go over, Volkswagen. By far the most upside, guys. This one is one that I would not be surprised at all if it doubles within a year. At all, I would not be surprised. It just makes sense. But the coolest part about Volkswagen is not only if we go to like the 5 year, if we really zoom out, not only is that a place where it had a very nice move out previously, we were at COVID lows. I mean, since COVID, when it was at this price of around $11 to $10, it had this move. I'm not even going to count this. This is absurd. Like going up to 50 bucks. That's just in one day. Probably some crazy earnings. I don't even know. But it was easily trading over $30. I think Volkswagen can double for sure, get over that range for a couple of reasons. Number one, their fair value is $34, right? Their fair value is up here. So that's without any earnings, without increasing EPS. They just got to release these EVs they've been working on. So big one right here, Volkswagen. Now I did say it has a crazy dividend yield of 8+%. That could even get increased as the stock drops, which would be exciting if we could get to 10%. That would be amazing. This is another stock I think is a pretty free opportunity here where you don't have to worry about like investing in Nvidia if that's going to fall down like 10% in a day, or Tesla, or I don't know, pretty much any really like really volatile tech stock right now. Sure, they're up a lot, but as of right now, I like targeting these undervalued stocks instead of ones that are already up a ton. Like if you're looking for stocks to buy right now, I'm not going to tell you to go buy Nvidia or Microsoft or Google. Those already had a crazy run. They're going to be coming down most likely. Whereas Volkswagen, Disney, UPS, they've been beaten up. They are undervalued according to fair value and EPS, and so it's time to buy now while they have very good plans for the future. So that's going to be it for this video. Please like and subscribe, and of course join that Discord community listed in the description. Have a great rest of your day, guys.